You deposit your paycheck on Friday. You check your balance. The number is there. It feels safe. It feels like your money. But the uncomfortable truth is this: the moment you deposit it, you no longer control it. In fact, you're not even the most important person involved anymore. And that matters more today than it ever has. Because right now, the global financial system is running on a quiet assumption most people never question: that deposits are money, that banks hold your cash, that access equals ownership. None of that is exactly true. And once you see how the system really works, it becomes impossible to unsee. Let's slow this down. When you put money into a bank, you imagine a vault, your cash sitting there, waiting for you. But legally and mechanically, that's not what happens. What actually happens is simpler and stranger. Your money becomes the bank's money, and in exchange, you receive a promise, not a guarantee, a promise. On paper, your deposit is a liability for the bank. They owe you that amount. But the asset, the thing with real power, is now under their control. This is not a conspiracy, it's the foundation of modern banking. And it exists for one reason: because if banks only stored money, they would be useless. Banks don't make money by holding cash, they make money by using it. The moment your deposit clears, it gets pooled with millions of others: salaries, savings, rent payments, all mixed together. And then it moves. Some of it becomes loans, mortgages, credit cards, business financing. Some of it goes into government bonds, short-term debt, long-term debt, promises stacked on promises. Some of it moves through financial markets, quietly, efficiently, at scale. And here's the key part: only a tiny fraction of deposits are kept as actual cash reserves. In many countries, that number is single digits, sometimes effectively zero. This system is called fractional reserve banking, which sounds technical, but the reality is blunt. Most of the money you think exists doesn't. It exists as accounting entries, claims on claims, confidence layered on confidence. And this works beautifully as long as one thing holds: trust. Because the system assumes you won't all ask for your money back at the same time. If you did, the math breaks instantly. That's not a hypothetical, it's arithmetic. If even a small percentage of depositors demand cash simultaneously, banks can't deliver. They're not designed to. And that's where control quietly shifts. Because when trust wobbles, banks don't decide what happens next. Central banks do. This is the moment most people misunderstand. They think central banks protect depositors. In reality, they protect the system. When liquidity dries up, central banks step in as lenders of last resort. They create money, digitally, instantly, and inject it where pressure builds. Banks get emergency funding. Markets stabilize. Confidence is restored. But notice something important. That new money doesn't come to you first. It moves through institutions, through balance sheets, through incentives. And by the time it reaches the real economy, if it does at all, its value has already shifted. This is where irony creeps in. You're told to be financially responsible, to save more, to trust institutions. At the same time, those institutions are structured to dilute static savings. Not maliciously, structurally. It's not a flaw, it's a design choice. Now zoom out. Digitization accelerates this dynamic. Money becomes faster, more abstract, more programmable. Central bank digital currencies are discussed openly now, not as a conspiracy, as policy, which raises an uncomfortable future question. If money is fully digital, fully trackable, fully adjustable, what does control even mean? Is money a store of value or a permission system? The answer depends on who sets the rules, and historically, rule-setting power consolidates during crises, always has. So here's the thought to sit with. Your bank balance tells you how much you have. It doesn't tell you who controls. And most of the time, that distinction doesn't matter until suddenly it does. So the next time you see that number on your screen, ask yourself this: if trust disappears tomorrow, who actually controls what happens next? And would you still call it your money?